let's giddy up. Let's go.
Ready to go. We kind of missed. We're
going?
off sequence. You can go.
All right. Well, good. Like I said, Cosmo Kramer, giddy up.
Giddy up.
We were just talking off camera about everything, all the events going on. I just got back this last week, and we're out of town again next week, and it is already the beginning of travel season. Well, it's kind of been travel season already, but
yes,
a little chaotic, but we are actually still pumping out episodes every week, and we're going to have a lot of them coming here very shortly. You know?
Yeah, we teaser preview. We got some good guests coming up that we're going to be syncing up with at Medicarians. That's what we were just talking about. Dan was telling Mosiah, our content guy, he's going to show him the town.
Yep.
He's a Vegas expert.
He's a newbie. He's not been, and I've been more times than I think I would like to.
Yeah,
admit.
Vegas holds no allure for us anymore. That's for sure.
No, that ship has sailed at least 5, maybe 10 years ago. So, but anyways, a lot to cover. Definitely things happening in the industry, and we're starting to get that pace of the year where there's notable changes, big headlines, big stories, things that directly and very materially impact the business. So I think we probably want to start with maybe some really big news from, about a week ago. I was out of pocket, so we couldn't really shoot an episode. But really last week, like I had some inside ball, so to speak. I knew that some things were coming down the pipe, but, candidly, there's timing to those things of when you can really go to market. But the big thing we're talking about is the DST election code. And, that was announced with the kind of the prior regime at Health and Human Services that they were going to make that election code only available for reps at CMS that they could use at their discretion, kind of like that CMS award, SEP, where a consumer would have to call in to CMS and have somebody use that DST or disaster election code in order to change their plan. And that decision got reversed last week.
I feel very prophetic that we talked about that oftentimes on the podcast, saying that we were very skeptical that it was going to go down like that. For one, we were unsure. The carriers were trying to figure out on the back end how they were even going to process these DSTs and how these reps at CMS were essentially going to arbitrate or decide who and what and where and how this SEP could be used.
And were there going to be enough bodies and people at CMS to do that with the current tone of, the current administration in cuts and cutting back in costs and headcount, and is there going to be even labor to do that, right? And so that was another component. There was a lot of components that we've kind of talked about at length, but like I said, I had a very strong feeling that it wasn't going to go into effect. And I also feel like there's been organizations out there who were making very drastic staffing decisions, cutting people, riffing employees, very unsure about what this lock-in would look like. And I think that obviously uncertainty with that election code played a factor. And I want to say it's the biggest factor, but it played a factor probably in some of those decisions. So
yeah, there's definitely been a lot of uncertainty because, like it or not, and we've talked a lot about the disaster SEP and the utilization, but yeah, there was an SEP cliff from this DST that had been normalized or been utilized fairly frequently throughout the industry, and the LIS and dual quarterly SEP, and the combination of both of those going away essentially was really causing a lot of consternation to a lot of labor forces that had pretty much built year-round, enrollments. And
now, one thing before we pivot, the one thing I do want to add, though, that I want to add the practical context to this change, though. Look, everybody, please hear me now. As Marty, as my dad would say, hear me now, believe me later. All right? This is a big win for us as an industry. If you're a broker, an agent, an agency, an FMO, this is a big win for us to have this election code. Please, please, please don't abuse this and have this come back and blow up in our face, meaning that I from everything I'm hearing already from carriers, from other industry kind of insiders, yes, we're going to be able to use this SEP to do plan changes, but this is not going to be around for you to use and abuse. That the intention is not that now, hey, this SEP is around and just, you're going to write 17 apps in a month, and guess what? 16 out of those 17 are all SEP disaster. There's going to be a big crackdown, though, on utilization of that SEP, how often, with what frequency. They're going to be checking it, tying it to certain NPNs and to certain agencies. So I am kind of putting that out there. That's the caveat, or the little disclaimer. It's there, and this is helpful. I don't think that there's any issues if you're a broker out there and you write 20 apps in a month, and 10 of them are agents, and you're writing a T65, and you have a couple that are, leaving in and out of a facility, and you use that SEP. You write 2 loss of group coverages, and you write 3 FEMA disasters. I think we're all on the same page. That's great. That's fine. Where you're going to have issues is if they're tracking an NPN, like I said, and you write 20 apps in a month, and 19 of them happen to be disasters. It's problematic. So.
Yeah, and the disaster SEP really was popularized during COVID, right? It was the COVID disaster SEP, and then it was kind of changed, and it evolved into this generic catch-all throughout the industry because it was hard to regulate. When does it apply? When does it not? Who's going to arbitrate it? And the carriers have really been cracking down on it for the past year at the behest of CMS anyway. And so, yes, it's going to still be available, specifically meaning you're not going to have to call into CMS to have them be the arbitrators of that, but that doesn't mean that the carriers aren't still going to properly apply the SEP rules as it should be written. Meaning, we all know we're all reasonable. There are many different disasters going on throughout our large country at any given time, and it makes sense to be able to have a mechanism to be able to change people's insurance plan in those legitimate areas, but it's not going to be the used and abused SEP like it's been in the past, and certain carriers are almost going to completely disallow it anyway, with a rare exception anyway. So it's not like, they just kicked back open the door to go use willy-nilly for like it used to be.
Right. And I envision this being more. So again, there's going to be eyes on this. So just be aware of that as you go throughout the year and you're using that election code. Also, if you're writing somebody in, I had a conversation, a couple gentlemen when I was in Tampa last week, we were talking about North Carolina, and we were talking about that part of the state that was just completely ravaged, that Asheville type area, still disaster zone. I mean, there are people like they're just getting roads back open. People still are getting critical things like water and electricity back now. And so, look, if you're writing disaster codes in those areas, very legitimate.
Yeah.
You know what I mean? Or
Southern California.
With the fires, or if you're in Florida with some of the disaster stuff with the hurricane cleanup. This took a long time, longer than usual. Like most Floridians are like, oh, there's a hurricane coming. Sure, whatever you say, disregard. But there were some pretty major ones this last year. So these areas, you're not really worried about, boy, my Part D plan is going to cost me an extra $200 next year if I don't change my plan.
Yeah.
You're worried about having electricity, so to speak. So those areas, I think we're completely great to continue to write business in those zones where people are very much impacted by that. But if you're just targeting a certain area where there's obviously these minor friction points and you're abusing it, then that's, I think, what's going to raise the questions. So
yeah, the other, kind of moving on, if we're ready, the other big news story that dropped last week that we didn't really get a chance to talk about was obviously the finalization of the merger between Cigna and HCSC.
Yep.
I think that was a long time coming, and seemed like, at least from the outside looking in, that deal possibly could have been in jeopardy for a while, or at least it was very heavily scrutinized.
Yeah, and it's interesting, that same day that it went through, 2 high-ranking officials at the FTC were axed the exact same day. I didn't know that. I didn't pay attention to that. The same day. So I'm not necessarily connecting those 2 dots or saying, but it was ironic. I was like, that's weird.
Well, there was one outlying state DOI that hadn't blessed the merger yet, and everybody, you could probably guess one of 2 states of which one that was.
Why don't we just say it was New York, right? So it's interesting because New York actually doesn't have, really, as far as from an impact perspective of HCSC or Cigna, really, material business in the state of New York. But yet, from what we heard, that was where some of the hangups were, lying with some regulators in the state of New York. So, but good news, passed. I think it's good news. I say it's good news just because from our perspective, it's challenging. We like the choices that are out there. We like how brokers and agencies have choices with distribution partners. We like that consumers have choices with different carriers. The kind of caveat, the however, but is things got a little wild for a couple of years where when you're looking at these areas and there's literally 17 different MA carriers and a total of 200 plus plans to choose from, it's a little out of control. And some of these carriers, I just don't think had the scope, the scale, the size to really compete in that space and compete effectively and be doing any service to the industry or the consumer. And so I think that this move of Cigna and HCSC taking some elements from both sides of their business and combining those together, I think is going to be a win long term. I'm saying in about 2 years, but I think it's still going to be rocky till we get there.
Yeah, we've had a lot of agents wanting to get updated contracts and things like that, and it's the HCSC in particular still operate a little bit like separate entities to some extent.
Yeah. So just to kind of give more, I want to maybe talk on that for a minute and just give a little more color because we've been flooded from requests for those contracts. Just again,
it's not an easy uniform contract yet.
It's not. I mean, Cigna from an operational perspective is far better than HCSC from our experience. And this is from Dan's, from my driver's seat, from what we see in contracting and onboarding agents and agencies with HCSC, every one of their states. So when you look at Texas, New Mexico, Illinois, Oklahoma, Montana, those states, every one of those is a separate contract request for each individual state. So for like one carrier, if you want to write in all 5 states, it's 5 contracting requests. It's 5 separate writing numbers for each state. It's a different portal to log into with each state. So it's really quite messy. And it's really hard. So if you're like, hey, I want to sell Cigna and HCSC and I'm licensed in multiple states, that's 6 contracts. That's the same work to go perform for 6 different companies. So, and again, kind of tracking, mapping, book of business stuff, commission payments. I mean, there's going to be a lot there that they're going to have to kind of mash together for a couple of years there. So, again, I think that there will be some good leadership there. I think that they will be able to be effective at, that acquisition and be able to blend that together. Like I said, but there's pain throughout that, right? So again, have appropriate expectations as a broker or as a partner, set appropriate expectations to consumers. Long term, like I said, I think this particular one's going to be a win, but just be ready for some bumps along the way for the next 1.5 to 2 years.
Yep.
So, but steady Eddie, I think right now, the other thing that I think they want to communicate to the market, at least for plan year 2025, is that everything is business as usual. So Cigna is business as usual, HCSC business as usual. On the back end, I'm sure they're going to be figuring out, staffing systems, efficiencies, operational things, but at least for what the consumer is going to feel and experience, business as usual, on that.
So a couple little long term, I think some consolidation there is going to be good for both of those carriers. I think they both have a good reputation for plans in all their areas, and it'll be some unification and some simplification of those contracts and operations going forward. Will definitely be good.
Well, let's be honest, like as we talk constantly about the industry and the dollars being squeezed and the margins being squeezed and having to have efficiencies and economies of scale to be able to compete. By doing this is going to put them in a much better position long term, especially when you're looking at, the under 65 business and the Medicare, the technology pieces, the leadership. This puts them in an actual competitive position. I think, again, this is Dan's opinion, not like don't take this as gospel, so to speak, but I think both of those organizations looked at it and said, hey, if we don't make a major move to, change our positions in the marketplace, then they were going to effectively be squeezed out over time by some of the largers, the bigs, right? And I think this is a good move. I honestly would love to see a lot of the other smaller blues, like if you were paying attention this last year, especially the blues were having problems with margins, with profitability. You can always read the headlines even about like the high marks and, ton of blues. I don't want to start beating up very specifically on a lot. I could probably go on a tirade of about 10 to 15 different blues that are all struggling with financials and product and competition in the marketplace. But, there's never been a better moment in time for those blues to kind of start
going to regulators
together.
Yeah. Crying to regulators.
Well, yeah, like the solution is not to necessarily go to the regulators and say, hey, I don't have margins and economy of scale.
We can't compete on this. Let's blow the whistle.
Yeah, no, it would behoove them to start trying to figure out some synergies and some strategies together and collectively. And I think I would love to see more of them grouping up, so to speak. But anyways.
Yeah, love that too.
Roll it up into Elevance.
Yeah, I wanted to talk, there's a couple different things are moving pretty quick now at like HHS, which obviously is regulates CMS, rolls up under there. And so RFK Jr.'s been in there for about a month now, and changes are already starting to happen and trickle through. It's looking like Dr. Oz is going to be confirmed. He's cleared the committee, and now it goes to a full vote. That's at least where we're at right now. And so there's a couple of different things that are already starting to happen. The news this week is HHS just announced 10,000 layoffs.
It's not a small number.
No, it's not a small number. And, definitely always sympathetic to people, losing their job but the statistic that keeps being touted by RFK Jr. is that, I believe it was the funding increased by 38% last year, and the headcount increased by 17%. Maybe I'm transposing those two, but then our outcomes are worse and worse, right? And again, everything keeps going back to an unsustainable real business, real cost practices where costs are just way too high. We got to start cutting some costs somewhere so we can reallocate dollars somewhere in the budgets.
Yeah, I think they were just not seeing, the results based on the increased spend, right? So they're making those adjustments. And yeah, to your point, I think once you get past committee, they already, like before things go to the full floor vote, they already kind of know they have the votes, right? So at this point, it's almost a formality. It seems like the votes are kind of in, and they're already making those moves based on him having the votes to go through.
There's been one thing I kind of wanted to bring up is something that we've kind of talked about or maybe dreamed about, hypothesized about before is Dr. Oz has floated the idea in some of these hearings of multi-year filings for the carriers. And I actually think that would be really interesting to see how that plays out, right? I think a year-to-year basis, a year goes by really quick,
right?
Especially in today's day and age. Back in our day when we first got into the industry, changes used to seem to be pretty minute from year over year, and there were some adjustments to funding and things like that, but there wasn't these big ebbs and flows in the industry like we're seeing now. And so I think that single-year plan filing is not really conducive to the current market environment. And so the hypothesis has been floated of 2 or 4 year plan filings.
Kind of like locked into your plan. Yeah.
Locked in, and there would be, a larger commission, less ability to change, and it's more of like, be more thoughtful, be more intentional, pick your partner. You're getting married to this plan a little bit more versus, willy-nilly change your plan every year, right?
Or the other idea has been that, like, obviously there's different election codes that we all use, and there's an election code for, change in LIS status, gain, loss. There's an election code for moving. There's an election code for chronic. There's an election code. I mean, if you're in the business, there's a whole SEP hierarchy of all these different SEPs you can use. Some of the other ideas that have been floated around, of course, is saying like, hey, maybe it's every other year that you have open enrollment or something like that, or you can use one of all these different election codes. Here's your buffet of all the different election codes. You can use one in a 24-month period, but once in case something really gets sideways or screwed up in your coverage, you have your fail-safe, you have your backup, something that you can use, but they're trying to limit the movement, which here's the interesting part about it. I continue to feel like I'm having to defend myself because I'm in the distribution or broker side of the supply chain. Because, I keep saying the shit rolls downhill, and I hate that, but it's true. From CMS to the carriers or the payers, however you want to categorize them, or, we start talking about PBMs and product creation and their formularies. And by the time it gets to a product is created and a go-to-market strategy, and it's in distribution's hands.
We're
it's
just
like,
the last mile.
Yeah, it is. That shit's just rolling downhill, and everybody's been pointing the dirty finger, I think, to the broker distribution. But at the same time, I keep saying I'm actually in favor for it. Like, you would think, well, oh yeah, we're going to screw these brokers over. They're, just wait till we get longer terms where there's not these election codes where people can switch. I'm in favor for it. I understand the model of care that's out there of what people are trying to achieve. I understand trying to actually treat like that actual person, get a baseline on what's going on in their healthcare world, really have like a clinical plan to help treat that person. And that takes time to establish. Yep. And by the time the carriers are figuring that out, half the time they're out the door to another plan.
Yep.
And so they can never do a proper job of caring and having better healthcare outcomes. So I am in favor of it. And just if they tweak and change the compensation models to account for it accordingly, I am perfectly in favor for it. So counter to what people would think, I'm not opposed to the idea of it.
Well, there's two schools of thought, and we're going to talk a little bit more about this towards the latter half of the podcast, but there's this idea that a lot of the churning and the plan changing is happening because brokers are financially incentivized. And that's where a lot of the finger pointing at the brokers and distribution goes to is, well, if you didn't have these aggressive compensation models to incent plan changing, then there wouldn't be all this plan changing. And the reality is the way that we make money, the way that FMOs make money and an agent, and the big draw and allure in this whole industry was to build a stable, predictable residual book of business that you are getting compensated and rewarded over long periods of time to build a good quality book of business.
And to be a resource to that member and to that life and that beneficiary, and help them navigate their coverage throughout their healthcare situations, and help them, which you don't get with a SHIP counselor, or you don't get with some of these, an AI or another tool that helps auto-enroll somebody.
Correct. So, and Dan and I, we've been in the industry a long time now. Dan, a year longer than I have, but we have clients.
2 years, 3 years?
No, I was 1 year, one AEP after you.
That's right.
We've had clients on the books now for almost 17 years that are still on the original policies that we put them on.
Some people are still kicking.
Yeah. And, we had a lot of those people that we put on, turning 65 early on, and they're still thriving, and they've been on the exact same plan for almost 17 years. And when we got in the industry, that was, the LTV of these policies and the average time that people spend on them. That was a very important metric that you wanted to utilize, right? You want to put people on these plans that they're going to be satisfied with, they're going to get great care, and they're going to be happy with for long periods of time. And over the past 6 or 7 years, we've seen those LTVs continue to erode and continue to fall down. Right. And it makes the average policy, the book of business, much less valuable. It makes it much harder. If you think that the brokers and distribution are the ones that like that and are the ones that always want to be churning and flipping and writing and, hand to mouth, that's absolutely wrong. Because
then everybody's just spending money to go steal a customer from the other person. I've got 10 FMOs trying to spend money to steal customers from our book of business, or you got the e-telebrokers spending money to go kind of steal and flip from somebody else, and everybody's just throwing money into this vacuum to go steal the consumers. We don't want that. And the other thing, just to clarify, is, how often do we, I still get phone calls, just so people know, they're probably thinking, man, Dan's been getting paid for 17 years on some of those policies. Yes, I still get random phone calls from people who are like, hey, I got this thing in the mail. No, you don't need to do anything with that. That's actually a fake advertisement. It looks like it's government. It's not official. That's actually a solicitation. Throw that away. Don't do that. Yep, here's the number for dental. That's not the main member service line. Call this line. I still will service some of those members who are calling me 17 years later. And there's a lot of things that we do for clients, and you hear of the stories from brokers that are not even related to their compensation, but they just feel like, hey, I'm an advocate. I'm like the go-to for my clients and customers, and I'm going to perform all these other services that aren't necessarily, directly as part of my compensation or role, but I'm going to help them anyway. And there's a lot of that exists in the industry. And so I would add that as one point. And then just the other point is, as far as the understanding of where the movement's coming from, it's not happening at the bottom. It's happening from the funding. If you look at like it's a look in the mirror situation, right? For CMS, if you're constantly changing the funding mechanisms to, oh, we're going to have this model and we're going to do SSBCI. Nope, we're going to have VBID. Oh, nope, we're going to do it this way. Oh, we're going to change the funding. Well, you're pulling those levers all the way in a compensation methodology, and then the carrier is going to react and file their plans accordingly. And then a lot of the times it's, how is a carrier performing in a certain area? What is their star rating? If they go from a 4.5 or 4 down to a 3, 3.5, their benefits are significantly changed. Significantly.
Yep.
They lose a double star bonus. Then the benefits are changed. They lose a major network. Those are the things that are happening. And then in addition to that, you look at this last year where carriers saying, hey, our economics are bad in some of these zones and territories. We don't pay a commission here. We're doing a plan exit there. When you start looking at all of those policies and everything from a top down, by the time it gets into the broker or the distribution hands, those changes happened at a much higher level. And once it's to the marketplace or to the market, the broker is simply responding or reacting to all those other elements that have been created from the top down. And so I think that is the component that CMS, that regulators need to understand, instead of just, oh, it's that broker because he wants a commission.
Well, yeah, let's keep going on it, because there's the statistic that's out this month is that 26% of Medicare Advantage beneficiaries had to make a plan change or made a plan change last year.
A quarter.
That's absolutely insane. More than a quarter of these tens of millions of beneficiaries made a plan change. And that wasn't because of brokers. That wasn't because we're all chasing, marketing dollars on a plan switch. In fact, I think brokers and distribution saved the day.
And they were underpaid and underappreciated.
Exactly.
Yeah.
And you had that because we have the funding environment isn't right. It causes all this downstream chaos, and the businesses all react. The inflation, cost of care is very high. And then you have a few other things that are continuing to affect us as well. CMS allows plans to keep filing more and more plans. And you look at the marketplace 10 years ago compared with today. And like Dan said at the start of the episode, there's, 8 to 10 to 12 carriers in a marketplace, all with 3 to 4 to 5 different, very similar plans filed in a marketplace. And all of a sudden you've got 130 Hickens in a metro area, and you're going, what's causing more chaos, right?
Yep. Well, so think about that financial incentive too. So to kind of dig in deeper, let's say I'm carrier X, and carrier X in this big metro area has 50,000 lives on this plan that has a 4.5 star rating. But because they have 50,000 lives on the plan, when they go to increase their benefits, let's say they want to reduce their co-payments in 3 categories. Well, that move alone is going to cost them, let's say, $20 million in revenue, right? Because they have such a big block of membership. And if they reduce that co-payment, what they're going to have in a financial offset is significant. Well, then these other carriers come into the market with new plan filings that are much more aggressive from benefits, and they can't keep up with those line item benefits. So again, what do? Well, let's file a new plan that has no membership, that gets, the funding environment of a brand new at that 4-star rating. So let's introduce another Hicken or PBP with those very sexy, attractive benefits as well to compete with Plan Y that's coming in. And then whatever members of ours stay on Plan X, we can stay on Plan X that are, very profitable. And then if there's any of our membership that is chasing better benefits, then they can go on to Plan Y. So again, there's no mechanisms in place to limit the number of Hickens or PBPs there. And so there's this gamemanship that is happening. And then again, you're like, oh, it was that broker that, guess what? The broker was already getting paid for all their clients on Plan X that they were happy with. The broker didn't want the carrier to go introduce new plans. The carriers brought in new plans that are sexier benefits, lower co-payments, or some other shiny new object, and their customer raised their hand and called them and says, I want that. That's usually what happens. Or someone else is, of course, banging the drum saying, here's the sexy new plan, come get on it. And if the broker doesn't go move them, somebody else is going to swipe them and go put them on the plan. So again, that's a perfect scenario of what is actually happening in the real world. not the narrative that's being told to Congress and to regulators and everything else. And the broker community is very happy in just having more stability and being able to answer real questions and help people navigate healthcare and how to utilize their plan benefits than flipping them every 6 months.
Well, there's that aspect to it. And then, if anybody from CMS ever listens to this, or you have anybody, decision makers, any of our friends in the industry ever want to send this sort of context to any of these actual decision makers, we'd absolutely love that. The other really chaotic thing that's happened in the industry over the past 10 or 15 years is every year, the marketing guidelines and the requirements have got consistently more difficult. And at some point, if you have insurance products, Medicare Advantage products, supplements, ancillary, and you need to find the consumers for that, they need to be educated. They don't know how to get on these insurance plans. Right. And I ask these regulators all the time, these individuals on these committees making these decisions, have you ever tried to market one of these Medicare Advantage plans to a consumer? Have you ever actually tried to follow your own rules and your own guidelines? Because what we've had is we've had 10 years of adding rules and regulation and compliance with the hope and the intent of protecting these seniors, that they act like they're just these absolute stupid invalids that are just susceptible to scam after scam after scam, which, sometimes there is that. But as a result, you have so many complicated marketing and rule guidelines now that things have almost been collapsed and compressed into, well, how can we do it? I guess I can send ineffective mailers to people, or I can bombard them with calls, or this is where the calls come into place. Is you have disreputable third-party TPMOs that are blasting people with,
or offshore ones.
Yeah, offshore ones that aren't going to follow any TCPA rules or any CMS compliance guidelines anyway, and then they're selling those calls because consumers are still interested, despite what you think. Consumers are confused about how to get on their plan. If you were to go take any of these CMS regulators, if you were to go to take any of these politicians and say, go to your average constituent and these people turning 65 and ask them, how does Medicare work? How do you even get on your Medicare? How do you even activate it? Then what happens? Then what plan do you choose? Why are you going to choose an Advantage plan or a supplement? What's the difference? You're going to stay on original Medicare. These seniors are so confused. They're the most undereducated, underprepared consumers in any marketplace or any ecosystem.
Right.
And brokers have always been done a very good job of bridging that gap and smoothing out that process. But when you look at the marketing guidelines that have happened, back when we got in, you could go do a consumer meeting, and market dynamics have shifted, but also compliance has changed so much year over year over year, where it's like, oh, nope, you can't do a community meeting. You can't sit down and buy a senior a meal. Oh, you can buy him a meal, but it has to be only a roll and a treat.
That's bundling, Mike.
Or it can't be if you combine a bowl of soup and a roll, then that's constitutes a meal.
You bundled, yeah.
And I bundled. Oh, so then we'll do a snack. Well, then a senior doesn't want to go drive across town to eat your stale muffin.
Well, remember, you can buy them a meal if it's educational.
Yeah. It's educational. Well, then can I help somebody at educational? Oh, no, you can't. Well, maybe you can if you file a different thing or take them over into a different room, and schedule a follow-up appointment.
Then call me after.
Yeah. You can't knock doors, because you're going to swindle these seniors. And you can't, if you send a mailer, then the mailer needs to be filed with this other company that needs to look like a tricky piece of mail where seniors don't actually understand what they're doing. Oh, you can't do this, you can't do that. And you've created this entire marketing ecosystem with the intent of trying to protect these seniors that have made it so narrow and so convoluted that it's so inefficient, and the end result is these seniors are more confused now in 2025 than they've ever been before, and it's not getting any better.
And what's happened as a result, Mike, is it's empowered really large marketing institutions and entities who have deep pockets, who have great technology, who have economies of scale, and who have legal counsel, and who interpret the laws and everything from CMS to the CCPA to TCPA to everything else. And those entities have been allowed to essentially capture the marketplace, and the average agent who is very well intending can't really go to market and compete. So as a result of a lot of the regulation, only those big, large marketing organizations, they benefit from it. The more regulation there is, the more that they grow, the more they scale, and the more it pushes out, really the little guy who wants to just get in front and get to the kitchen table to help somebody.
Yeah, even 5 years ago, an agent in the local marketplace could hire a mail piece, spend $1,000,
right,
get a good ROI, get actually legitimately interested people in, book appointments, go meet with those people, and rinse and repeat, and build a book of business in a healthy local way. But just with market dynamics shifting, with what we used to work isn't working anymore, and then everything becomes disallowed and everything becomes regulated. And when you have so many rules and so many regulations, I would say the average agent has no idea what they can and can't do. They take their AHIP tests, and as long as they can answer the right questions on AHIP, they think they're good to go. But they just feel so stuck and confused with what's permissible and what's not, that it's a complete unintended consequence.
Yeah, well, we still have agents trying to get to with the times as far as doing their call recording, and that was years ago. We still have agents who are trying to adapt some of their processes to actually do a scope of appointment correctly, and these are things that were passed years ago. And look, we're just saying that because I live on planet Earth and we deal with it every day. So it's great, to sit behind a desk and make up rules and sign it in and say, here's the memo, go henceforth, done. That's great. But, in practicality, to kind of get that to the market is very different. So,
that whole other component of it too, which is if you're doing virtual enrollments or telephonic enrollments,
right,
and you have all of these epistles of disclaimers that you have to read, that when you actually, again, I'll challenge any CMS regulator or any politician out there, go try reading one of those disclaimers.
Well, and if anybody is listening, I've said this for 2 years now. Please, for the love of God, the TPMO disclaimer, look, if you feel like that's really important to disclaim, like what plans and how many you represent, fine, put it on marketing pieces, but can you just incorporate that disclaimer into the statement of understanding? Because anytime you're going to go complete a sales transaction anyway, you have like a pre-enrollment checklist, and then you have to go through a whole statement of understanding of things that a person needs to understand anyway, kind of like you must have a Part A and B, and you must continue to pay your Part B premium. You must reside in an area where this plan is available. You're already going through a whole checklist, so why not just put that TPMO disclaimer in the statement of understanding and eliminate the whole, hurry, within 60 seconds of the call, I got to cut you off and put this disclaimer out there and make it feel very unnatural to just my conversation with a customer.
Well, and it has the opposite effect,
right,
because these consumers are like, well, why are you saying that? That sounds, I don't understand that. And then even the disclaimers that you're talking about, look, we've all bought a house or bought a car before. We've all sat down and had a 700-page contract before us, and the guy basically says, this is what you're signing, and most people don't read through that, right?
Right.
It's the same thing when you're doing these telephonic enrollments or even an in-person enrollment, and they have all these big disclaimers that are written in legalese. I don't care who you are, what agent you are, when you read those to the consumer, they're like, what the hell are you talking about?
Well,
that doesn't make any sense. I don't know what you're saying.
Well, with our remaining time, I don't know if we want to make this the feedback for CMS for changes episode or not. But while we're kind of on that track,
yeah, we say what you're going to say, and then we'll wrap up with that last piece.
Well, no, I digress.
Message us on LinkedIn, and we'll give you some more thoughts.
Yeah. Just as far as the complication of the transaction and how it could be a better experience and a better quality. I have some ideas, but we'll go into another episode. Before we kind of run out, we wanted to talk too about some more big industry news that I would say which is SEP-INT, right? We haven't talked about that either. And before we run out, I just want to say that's we're already discovering that for those of you who aren't familiar with it, the dual election code is also gone as it was in prior years. And now that, March is ending, moving forward, you're going to be able to write dual eligibles, but it is only in areas and only with plans that are fully integrated or highly integrated. So HIDEs or FIDEs. Okay. So there's a lot of plans, and we're still seeing that there is a lot of misinformation out there and agents who are not prepared for what is about to happen. There's a lot of products that they still think are duals that they are going to write with an election code coming up here in a week or two, and they're not going to be able to write it. So again, CMS has a file on their website showing all of the plans that they recognize as Heidi or Fighty, and you can actually filter down to the state and the actual Hickens and PBPs that are truly recognized as Heidi Fighties. Those particular plans, you will be able to have an election code and write SEP-INT, like an integrated plan. But if it's not one of those plans on the list, you will not be able to do it. Furthermore, we're finding that for most states and most areas, you first have to align the Medicaid MCO to that plan. Like, let me just give you an example. So if I were to go try to write a WellCare, like a Centene or WellCare dual plan, you typically first have to either have that member contact and get their MCO changed to the Centene one, or assist them and be on the line and get their Medicaid MCO changed to the Centene first before you complete the dual enrollment. If you try to go write the dual Heidi Fighty plan first and you don't have the Medicaid MCO aligned, it will not get accepted. You'll have a rejected application. In other states like California, you actually just go ahead and write the dual plan, and then it actually drags along the MCO on the Medicaid in that particular. So I'm kind of getting.
If you're sounding like that's complicated, then that sucks.
Well, listen, you're in for it, my friends.
Yes.
And what I'm saying is this is a very complicated industry, and it's getting more and more complicated. So what I'm telling you is there's certain states where a person has to be on pathways first before you can, enroll them into their dual with the INT election code. So what I'm telling you is I think there's a big education lift that needs to be happening, that we're working really hard right now. I continue to say I work really damn hard for my money. We really do. Mm-hmm. I feel like I earn every freaking penny and then some for what we do. And we're educating these agents and agencies constantly about, look, this is what you need to understand. Like, what state are you trying to write it in? Have you investigated and researched the MCO? Does that need to be aligned first or after? Do you write the plan? Like, what are the ramifications? So there's cheat sheets and one-sheeters out there, but I think we're going to see a big spike of rejected applications, poor quality business here over the next 30, 60, 90 days until this kind of learning curve from the agent distribution is fixed.
Yeah, I think we're going to see the dual market go from a very large portion of enrollments and focus from agents to almost non-existent overnight. And I think that most agents are going to just decide they're going to not even try to bother.
I think we're going to see a different. I think you're going to see agents who, I'm calling it, are going to be specialists, and they're really going to specialize in that. And they're going to really know their crap, so to speak. And that's going to be their niche. And they're going to do very, very well because they understand it very deeply. And they'll write a lot of business. But your average Joe Schmo agent who just
that's true
doesn't care to learn or get better and improve, the business is going to pass them by.
But as a macro level, I think that you're going to see obviously those dual enrollments
cut in half,
cut less. Yeah. I mean, even more so than that, and that's okay. I think that that will eliminate even further brokers and low value, low acumen people out of the cycle of the industry. And I'm still thinking they're going to make some sort of change or amendment to that policy for the duals, because I think there's going to be legal challenges in states where there's not aligned plans and Heidi's and Fighties. And I think that that's a pretty easy case to make, in my opinion. But I do think that the days of these duals having the world as their oyster, being able to change all the time to multiple different carriers, and are starting to go away, right? And that whether it's in charge or, dang it, I said bad word, or R's or D's in charge, that the duals are going to continue to be aligned, and it's like if you're basically on those plans, then your options are probably going to be limited. And here's what's available to you to work within the within the system.
Yeah, we'll do another episode on that later on, but just to kind of preview everybody, the way that the industry is going within the next 2 to 3 years is where those duals are, to your point, assigned, or they have like a Medicaid MCO or an assigned network, and they're likely going to auto-assign over to certain plans or have options, but are more limited options. And I don't think that it's just going to be, to your point, like they can change everywhere willy-nilly with all these election codes. I mean, if you think about it, that segment of the population causes so much friction and movement and instability that I think that's the focal point of what they're trying to kind of correct a little bit and get that segment of the business to settle down a little bit.
Yep.
To kind of get a little bit more stability. So that is something that there are changes on the horizon. Like, look, again, I'm an advocate for the consumer and for what's best for them. And, I feel that the broker community and the distribution community plays a very, very critical role in that and educating and helping the consumer. And we are their biggest ally. And if you're a broker doing a great job, you're like a vital resource to them.
Yep. Well, let's kind of wrap up by adding on to that, or kind of parlaying into that. And, one of the things that we haven't talked much about on this podcast so far is AI and kind of what's going on with AI in the health insurance, and not just health insurance, but the industry in general, right? It seems like everything's AI now, right? There's no more computer programs. There's no more SaaS. Everything's AI, and emails are now written by AI, and all the marketing sequences and the campaigns, everything's AI, and everybody talks about whatever their tool is. It's AI this, AI that.
Do you want to polish this up with Gemini?
Yeah, and I get emailed about some new AI tool in the industry for marketing or calls or call scoring or whatever 15 times a day, and then another 15 times a day on LinkedIn.
Yeah, and by the way, if you have an AI technology, I'm not interested. All right?
I might be, but there's everything. It's just, I have no idea, because everything's AI these days, right?
Yeah.
Well, one of the emerging annoyances that's been coming out for me over the past quarter is I'm seeing this weird alliance right now between a lot of anti-broker and anti-distribution regulators and politicians and fintech companies. Like, they're all these new up-and-coming technological solutions sharing LinkedIn articles or sharing information from the Senate Finance Committee or something, or the MedPAC survey about how brokers are doing a bad job, and all the stuff that we just talked about, right? And I'm sitting there going, why are we getting vilified,
Yeah.
And this is Mike Hardle's principle of, whenever someone's telling me something, some sort of messaging, whether that be a politician, a news source, an influencer, I always go, what is your motivation in telling me that, right? Are you telling me this because you're trying to sell me this? You want me to vote for you? And I'm starting to look at some of this messaging out there, and I'm going, who's this person that's sharing this opinion or lobbying for this, right? Or joining this committee? And you go and you're like, that guy's part of a tech company, right? And what do you know? They're selling an AI solution, and they're out there sharing all this information about what a bad job brokers are doing and how expensive we are and how much fraud we're contributing to the ecosystem. And I'm like,
because their solution could solve that, and all they need is a $700 million government contract, and they could solve it.
Yeah, it's the tale as old as time. And I'm sitting here going, this is really weird. All of a sudden, there's like this tech bro alliance that's going on against brokers, and I feel like it's the Paul Bunyan versus the machine modern version happening of brokers and humans versus.
Wasn't it John Henry, by the way?
Was it John?
Wasn't it like John Henry that was like the steam locomotive versus the?
I don't know. I put up whichever one of them it was. Like, someone's gonna correct our old fashioned lore. Anyway, it's this really weird alliance emerging right now between anti-broker legislators and fintech bros, and I'm sitting there going, this is, well, of course you're exacerbating and highlighting any sort of problem with the broker distribution, and because you have a solution to it, right?
Well, but I also think too that there was, just so you know, there was like a big movement for like ESG for a while, and for carbon credits or for green energy or whatever that, that undertone is with the administration, and where's there's some of those government dollars and contracts to go chase, right? And I think that we can all say that right now, like, if it's not big with the U.S. government for like ESG, carbon credits, green energy, all those things are, no one's really bullish on the administration for those things. And so, again, I'm seeing that they're like, oh, we're going to pitch this side of the economy, so to speak, on efficiencies of eliminating these brokers and fraud. That's what I think some of them are obviously chasing right now. But, obviously my opinion to that, of course, like, look, we use AI, right? Like, we have multiple products that we use AI for, very specifically, but it does not replace the broker or what we do. Like, we use an AI on some outbound qualification. We use some AI with some chatbot stuff. We use AI to rank and grade, calls to kind of, it's a barometer. It points us in the right direction. It helps us with our QA scoring to where, we at least know where to look, but it's not the ends all be all, and it doesn't solve things, right?
Yeah. And that's what I'm seeing right now is there's a lot of these tech companies that are offering up their AI solution as this panacea for what's going on in the industry. And like, wouldn't it be nice if Mima could just link her social security profile, like the old school blue button thing back in the day. And this altruistic AI tool just goes in and analyzes the plans using all these unbiased data points and tells Mima that she should join this plan. And she's able to be enrolled in that right there. And then we use this AI to perfectly match this thing. Well, that's great, except for, all the other concerns about AI historically and future come into play there. What is the intent? What data points are you analyzing? Who's programming it? And then not only that, like we were talking about off camera, is then what happens? Then that's one portion of what a broker does, right?
Well, look, we could use the same thing, and look, in the same degree, like we already have quoting tools that are using a lot of that, and there's AI, and there's products out there, and people are going to be like, oh, these guys at Agent Boost are stupid. No, I definitely know that there's AI systems out there right now that like warm the lead, that run through the whole entire sales funnel and get it literally to point of sale, and it's just transferred to human. And they do, look, I'm very aware a lot of those tools out there, but there are still flaws in what they're doing. And there's other nuances that I think, again, our healthcare system that we talk about all the time is way more complex than it should be. I think we all recognize that it's a challenging system to navigate. So this isn't an easy transaction. This is not where like, I'm comparing 3 different barbecue grills and I'm trying to decide which of these 20, I should be buying between Pitmaster and Weber and whatever else. And I'm looking at features to compare them. That is not what this is. And a lot of, the deeper questions that good brokers and good agents would have to be answering is generics versus brands and quantity limits and walking people through step therapy and what that means, and transition supplies of their meds, and understanding that this doc is actually not a doc, it's actually a PA, but they're still part of this medical group and they're part of that ACO, and you would or wouldn't have access to it. I mean, there's a lot of things that are just not binary where you match data point A to product B, done. There's a lot more to the transaction than that.
Well, and kind of my final plea, both to CMS and about agents and brokers, is agents are still the best deal. We're still the best date in the whole ecosystem, in the whole industry. Because look, a good agent and a good FMO is your acquisition, right? You have your customer acquisition. So you have the cost to obtain a new customer and client built into that. Then you have a customer service component all throughout as part of that residual component, where that client can call their agent, get their questions answered, have support, have a real human interaction that they feel trusted with. And then third is you have a retention component, right? That's retaining that policy long-term. And that's the initial way that FMV, that compensation was set up and designed to award that, right? The acquisition cost, the cost to do the customer service throughout the year, and a renewal component of it. There's not a lot of things that we need to fix. And if you go analyze that and say, for the cost of FMV compensation, you get an agent to acquire the business, perform customer service for most of it and then retain that business, it's an extraordinary deal and it's a very good win, and yet it seems like for whatever reason, the broker and distribution channel has become public enemy number one in the healthcare space.
Right.
And, this story that we're telling, and Dan and I are talking about this more and more frequently and more loudly because, collectively we as agents and brokers and distribution, we have a loud voice and we know that we serve a very valuable part of this ecosystem, and we have all these consumers that we've helped, and we know what the alternative is. So I think, we all need to collectively keep banding together, keep talking about this, and speak with our actions, like Dan was talking about doing a good quality job, not abusing certain things, being part of the solution, not being part of the problem.
Yeah, and the other thing that I would just add to is, I'm having conversations with different carriers even next week, like in person when we're there at, Medicarians. And, one of the things I've been talking to them about is, compensation. Well, if you don't like some of the behaviors, because, the argument, the other side of the coin is always, well, we pay brokers a commission and then they only just do the enrollment and then they don't do those other things. Great. Well, then, look, I'm all in favor to change the compensation mechanisms like we've talked about it before, and I'm going to be pitching and presenting even to some different carriers about saying then modify the compensation. So why not pay a fee for the enrollment, and then why not pay other fees and break it up for other services performed, like, retention past 93 days, past like the rapid disenrollment rate. Why don't you pay for like a carry-through rate, like your PMPMs or, other bonuses, and pay mechanisms that align with some of the goals that you want to recognize in quality. One of the things that the ACA has done right is, paying like renewal bonuses, like on how much of the book of business that a broker's renewing each month, or each year. So some of those components can definitely be modified or brought into the conversation about how a broker is compensated. And I think for the good brokers, ultimately the ones doing a great job and good quality would make more,
Mm-hmm.
and I think that can definitely be a discussion point that people should be having as well.
Yeah, I like that. Good brokers should make more, right? If we can eliminate, Dr. Oz mentioned that there's probably too many brokers out there.
Right.
I probably agree. Let's eliminate the bottom third, and let's reallocate that comp and those commissions and that service work and all of that to, the upper portion.
Right. But if you're a carrier and you're frustrated because you pay those stupid brokers that we pay these fees and they do one enrollment and we're paying them 5 years later for nothing, there probably are some bad brokers out there like that. So why is it that a crappy broker like that gets paid the same commission rate as the one who's literally driving their customers to their pharmacy to pick up their meds and helping them apply for LIS or helping them get other resources in the community and spending 10 hours in a week to help a customer, versus somebody who's never even had a follow-up conversation with their member 5 years later? Why are they receiving the same compensation, right? So if you're unhappy with it, then let's change the way it's compensated, right?
Yeah.
So that's...
Well, I think we covered plenty of ground today, a little bit all over the place. But if you happen to find us at Medicarians or whatever, we're going to be shooting some podcasts live on the vendor floor.
What's our booth number? I forget.
447. Most people probably won't hear this if they're there by then, but catch us. We'd love to meet y'all in person, anybody that listens to this. And stop us if you have a good episode for the podcast, for sure.
All right, man. Sounds good.
Thanks, guys.